Okay, welcome everyone to the
Obviously more to
Western
come on this
Washington Food
conversation,
Systems
but I didn't want to give you an update that we did have that meeting and we're still trying to,
and
it needs to be
it's
clearly.
October 31st. Happy Halloween to all of you. And we're really excited today to be welcoming our partners at Dirt Capital Partners for a session on land access and land transition. And before we get started, I just wanted to introduce myself and pass the mic to Michael Peroni, who's the Executive Director of the Northwest Agricultural Business Center. But my name is Abba Kaiser. I use she, they pronouns. I'm stepping in today for Marty Solomon, who has been shepherding this initiative on behalf of NABC and has been instrumental in getting all of these incredible speakers in the room, along with Emily Mankey, who has been providing administrative support for the team. And so it's my pleasure today to be your facilitator, and I'm going to pass the mic over to Michael Peroni to say a quick
Thank
intro.
you, Abba. And good morning or good afternoon, everyone. Thank you for joining us. I've had the pleasure of chatting with Amanda on the phone. I've learned a little bit about Dirt Capital Partners. I'm very interested in hearing more about their business model and the where the capital that they use comes from. They're, I think, a little bit different from some of the other organizations operating out there in terms of the source of their funding and their business model. I would be remiss if I didn't mention that these lunch and learns are made possible through a USDA AMS Regional Food Systems Partnership Grant. NABC is the grateful recipient, and in an effort to provide not only information about NABC and our services, but also introductions to other relevant organizations and services that they offer. We just have these informal 1-hour sessions. I see some new faces today. I've scrolled through and recognized a few people, some of which I saw over the weekend. Amanda, for your information, there was a regional agricultural conference this past weekend. Everyone kind of had a chance to see each other in person. So I think we're kind of riding the crest of that wave a little bit. Without further ado, Abba, I'll hand it back to you or straight to Amanda, whichever you prefer. Thank you for the opportunity.
Thanks, Mike. And just so everyone knows, this session is being recorded. It will be a part of the Lunch and Learn library that is available on the Western Washington Food Systems Partnership website. I just posted the link in the chat if you're interested in revisiting any of our previous sessions. I see that Maxime rejoined as well. Maxime, did you want to just unmute yourself and give a little introduction on behalf of NABC? I know there might be some.
Hello. No, I think the introduction was already great from Mike. Hello, everybody. Happy to be here with you all.
Excellent. Thanks, Maxime. Emily, anything you want to say before we get started?
No, I'm just always excited to learn about new ways that farmers can fund land. So I look forward to and figure out how to stay on land. Just look forward to learning more.
Awesome. Thanks, everyone. And at that, I'm going to welcome Amanda Zakharoff and Martin Lemos from Dirt Capital Partners to talk a little bit more about their long-term secure land access programming. So I'll kick it off to Martin. Welcome.
Hi, all. Thanks for making time with us. I'm going to introduce myself and then hand it over to Amanda to kick us off. My name is Martin Lemos. I use he, him, his pronouns. I am Director of Impact in Agriculture at Dirt Capital. So I lead our impact strategy processes, and I'm also a key support for farmers in our portfolio. Prior to joining Dirt in May of this year, I was one of the co-executive directors of an organization called the National Young Farmers Coalition, working on land access for young and BIPOC farmers across the U.S. And prior to that, I was a farmer for about 10 years. I farmed outside of Portland for a couple of years and in Massachusetts, and then I ran a farm outside of Chicago for about 5 years. So really excited to talk about this topic and to dig into this with you all.
Great.
And I'm Amanda Zakharov. I am our Director of Investment. So I work with farmers who are interested in working with us to talk through our process, to figure out if we're a good fit and take transactions to a closing. I have a background in commercial real estate and have been passionate about agriculture for a long time and impact investing, which I'll talk a little bit about shortly. And I'm actually based out of Phoenix and excited to be with you all here. So I'm going to tell you a little bit as an overview to kick us off of who we are here at Dirt Capital. So we're an experienced farmland partner, really formed to work with farmers on secure farmland access. So we've been doing this for 10 years, but you probably haven't heard of us because we've mostly been in the Northeast. We are expanding across the US as part of our latest fund. We do have one investment in Montana and one in California, but we've 33 transactions, over 5,400 acres of land, mostly with smaller growing farmers. And we'll talk a little more about the profile of who's a good fit for us and for our model. Mike was asking about our investors, and I think that's an important part of who we are, because at the core of what we do is that we are impact investors. So we raise money from families, from individual investors, from some foundations and institutional type of investors that are interested in affecting change. So that's supporting farmers and also ecological change. So Martine is going to get much more into our impact framework and the way that we view our multifaceted approach to impact. But I think that the fact that we are impact first is a huge part of kind of who we are as a group. So wanted to put up a few things of what we do, but I think it can be a little bit complicated. And at the core of it, we are a guide to something complicated. So land acquisitions can be difficult, especially on farms, especially when you want to do a lot of different things. So I'll talk more about the basic way in which we work, but overall, we're really looking to partner with farmers to figure out what is the right fit. Our main tool is this long-term lease where we create a pathway to ownership, where a farmer will know how much that purchase option is going to be down the road. But we can also do other joint venture structures. We can do mortgages. We're looking at this with a real estate investor's hat. So that multiple sources of value that I have up there, we can try to say, does it make sense to have some other affordable or farm worker housing on the property? Is this a good candidate for solar? A major tool that we use is conservation easements. I know you've had multiple other speakers who are really strong into this, but what we do from our side is lead that process. So by using this purchase and lease model, we are able to facilitate that conservation easement during our kind of transitional period of ownership. So when we use this tool, we view ourselves as the temporary owner of this property with the goal of it really being in the farmer's hands. So just some common questions that we get and walking through our process. None of this is fixed in stone, so please reach out regardless, but some high-level criteria. We are looking for farmers that have a couple years of history, either as a farm or as a manager. So if you've already run a farm, you understood what those financials look like and are starting your own, we want that management experience though. 200,000 in revenue is not necessarily a hard line for us. The biggest thing is project size and whether your business is a fit for the piece of land that you're wanting to purchase. So for example, scaling up from an incubator at a half acre going up to 40 or 50 is going to be a really big leap, right? So there's probably something in the middle there that feels like the right growth story for your business. And we're going to walk through where you're at and what you want to do in this transition, whether that's buying a piece of property that you're already on and operating or going to expand and buy something else. Farming practices and our impact goals, Martine is going to go into in much more detail, so I'll leave that to him. When should I call? Anytime. Please reach out to us. We love to talk to farmers. I love to talk to farmers. I don't have a farming background, so hearing from you guys what you are looking for and being able to talk through the process and what works best is what we like to do every day. It's most productive when you are actively seeking a property or kind of early negotiations. Maybe there's a neighbor that's selling. Maybe you kind of know what region you want. You know it's going to be next season, or that could be a good time to call us. Definitely don't wait until you're already under contract. We can catch up, but it's harder. We're not a traditional lender. We're really looking to partner with you. So starting out a little bit earlier is a little better for us. But just always feel free to fill out our farmer inquiry form. I will go ahead and drop that in the chat in a minute. That's the easiest way to get a hold of us, but we will also have our emails at the end. Feel free to reach out anyway. And how long does it take? We move at the speed of real estate. So we will, as I said, if you come to us and it's already under contract and you need to get going, we will get going and work hard for you. I think our last deal that we closed was a few weeks after we received most of the diligence. But we prefer to have a 45 or 60-day diligence period in which we're not just doing the traditional real estate stuff, getting an appraisal, getting buildings inspected, title and all that good stuff, but also understanding your business and the impact that you have through our framework. So we can do both of those simultaneously. However, if you're at that point where thinking about it, you want to get ready, you want to be able to move fast, once you do have that property that you're excited about, then we can get to know you earlier. So we'll do that farm underwriting in advance of having a property to identify. So we'll go through that financial part and get to know each other before we're working on an active deal, which can really speed up the process. So now I'm going to hand it back over to Martine to talk through our impact, which is really important part of our process, as I mentioned.
Thanks, Amanda. And yeah, I'm just going to kind of reiterate some things around impact investments, because I think sometimes that could be new for farmers to know that's organization that's an impact investment and how they would work for you. So Dirt Capital is an impact investor, and we have investors in our funds who are philanthropic foundations, family offices, and individuals. And they expect impact to be kind of front and center in our work, right? So they are expecting a minimal or a below market return on their investments, but they're expecting a lot of impact as well. So they're looking to us, the value that we're bringing to these investors. It's a place where we're deeply aligned with their interests in advancing a just food system and regenerative agriculture. So what that means for us is that we take an impact first approach in our work, and impact is integrated across our organization, from how we assess opportunities, what we try to track when we work with farmers in our portfolio, what we report on, kind of the metrics that we use to assess how things are going for both farmers and for our portfolio as well. And our specific impact thesis, like our core belief, is that regenerative agriculture depends on connecting land and farmers, that securing land access, that enabling a pathway for working farmers to turn their labor into equity is essential to making regenerative agriculture viable and successful in the long term. And we believe that farmers who are thinking about the long term, that are focused on stewardship, that are focused on serving their communities, are good for the land. So that's our working assumption, and our impact process is a way for us to kind of demonstrate and kind of prove that assumption and kind of continue our work in this ecosystem. So I'll go into a little bit more detail about our impact framework. And our impact framework is a way to add a little bit more substance and structure to these kind of bigger ideas of like impact in this space, right? So we've developed this impact framework that seeks to identify the kind of 4 core themes that we want to advance. And those are ecological stewardship, farmer equity, community benefits, and then field building. And this is a really robust framework. Within each of these themes, there's outcomes. Within each outcomes, there's metrics. And we are using these at all stages of the life cycle of a project. So I'll talk a little bit about each theme, just to give you a sense of what we mean by each of these themes and how they would show up in our work. So the first theme is ecological stewardship. The reason we invest in farmland is because we believe our investments help put farmland on a more positive and regenerative trajectory. So under this theme, we're looking at projects to determine how they're helping that positive trajectory. Is there an opportunity to conserve this farmland? Is the farmer partner someone who has experience prioritizing soil health, and they can bring that to this new piece of land? Do they have experience regenerating a piece of property or converting it to organic or using it in a new way that really upholds these values of stewardship? What are the impacts on water? What are the impacts on livestock? How do they manage livestock? What are the sort of biodiversity impacts as a result of their farming operations? So we have a whole suite of outcomes that we use to help assess, to what extent is this investment increasing ecosystem health and advancing regenerative agriculture? We have a second theme on farmer equity. We think that good ecological stewardship really depends on farmers having the financial resources, the incentives, and the financial stability to make the best decisions for their land. So we're really interested in the ways that our investments help a strong farmer build a more resilient business, by securing long-term land access, because that land allows them to expand their operations, allows them to diversify, allows them to have a better cover crop rotation, allows them to serve more customers, expand their CSA, or look at different, value added processes. Or as Amanda mentioned before, is there an opportunity for bringing more farmer housing and affordable farmer housing on the site as well? So we're looking at this, again, this suite of outcomes that fall under this theme to really assess, to what extent this opportunity will allow a farmer to build a stronger and more resilient business. The third theme is community benefits, and it reflects our belief that investments have the potential to positively impact local communities. So we're looking for opportunities where there's a contribution to job creation, economic development, improved food security in the community. But we're also thinking about the ways that this investment helps change the ways that land access is and farm financing access is available in our country. We're really looking at the ways this opportunity allows us to finance underserved communities and farmers that have been historically discriminated by USDA or other financing institutions. So we incorporate racial equity throughout this framework. So it also shows up in farmer equity, where we are thinking about land access for first-generation farmers and BIPOC farmers, but it also shows up in this community benefits, where we're looking at farms that have this value around supporting underserved communities. And then the final theme that I want to touch on is field building. So we are kind of acknowledging here that the farmland investment sector has a long way to go towards, growing and also building more collaboration, knowledge sharing, innovation. There's just a lot of need out there, and we want to be supportive of the growing of this movement. So by contributing to investor networks, how we're thinking about partnering with other organizations, other nonprofits, how we're catalyzing more investment, we are tracking the ways that an investment has an opportunity to has knock-on effects, right, on other organizations being able to do this, right? They see these models that we've been able to implement, and they are able to implement it in their own organization. So this framework is implemented at Dirt Capital through our assessments, which are part of our due diligence process. So as part of that due diligence, we are getting to know our farmers, getting to know their farm business, getting to know how they farm land, getting to know them and their communities, how they show up in their communities. And we're using that to assess opportunities. And we're also really integrating that into our underwriting process. So we weigh a project's impact and financial return together, and that allows us to underwrite higher impact projects to a lower target return. So impact really is at the core of how we think about the terms that we offer, the farmers that we work with, and how we manage our portfolio. And I think, Amanda, you have the next section.
Thanks, Martin. So just to talk about a few ways that we differentiate ourselves. I think the first one that I mentioned is conservation easements. So actually taking the lead in that piece of it, and being able to go out and find a partner that is able to purchase an easement, provide the maximum amount of funding. So we will do that negotiating, and of course talking with the farmer to figure out what this property is for you in the long run. What do you want to be able to do on it? What's the right size of the development area, and what do you want to be able to do on the rest? What restrictions are appropriate in order to get the maximum funding for you? We were able to fund both the purchase and construction of infrastructure and farmer housing. So if that's something important to you, definitely something to find out upfront from whatever lenders you're hoping to work with. We can also in our leases, we tend to set aside a leasehold improvements to be able to fund those in the future. So even if you don't know, I will definitely need X, Y, and Z day one or as soon as possible, there's also a possibility to fund those improvements down the road. Whether that's a house for yourself and your family, or house workers, or value add infrastructure, for example. Technical assistance, as Martin mentioned, you get to work with him and all of his wealth of knowledge. As I mentioned, I'm not a farmer, but I will do my best to work with you on the front end too of figuring out the right plan for this piece of land, especially if it's a new one for you. No lender fees. This I think should really be true of most of our mission aligned peers that you'll hear from here, but I did want to mention it, and I think it's a red flag to look out for if you are looking at there are predatory lenders out there. I think it's something to keep in mind. And we are flexible. This is what we're formed to do. We're formed to work with farmers, and we are really formed to think about it from your perspective. So that kind of leads into this structure. So if you're watching this online, feel free to pause. I know it's a lot of information, and I'm not going to go through every piece on here, but I did want to walk through it because we are different. It's not a traditional mortgage. You're not paying back principal over time. This lease to owned type of structure works best for farmers that want to keep as much of their cash in those early years to either put back into their business and save up for something else, or just won't have it if it's a type of property that needs a transition period, needs a ramp up. This structure allows you to do that. So we would purchase it day one, so 100% of the proceeds, and sign a long-term lease. So we usually use a 10-year lease with options at 5 or 10 years to buy it. And we can design this with you. We're looking to have this be ownership like. We're not trying to control your business, and we can be flexible on payments. So if that's, hey, I get most of my cash flow at this time of the year, or I would prefer to do quarterly or whatever it is, we can be flexible. Or if it's over the period, so like the first couple of years are going to need to be low because I have these 2 payments coming up, or I need to transition to organic or whatever it is. We then typically it takes 2 to 3 years to get a conservation easement done, which is why it's beneficial to have a group like us doing it, and we're able to take the lead on that. But the way that we work is that those funds actually go to us to pay our investors back early, and then we take that amount that we received and reduce the purchase option for you in that year 5 or 10 by that same amount, so that benefit is passed through. And hopefully, so these are fixed purchase options, so you know how much it would be other than the amount of the actual conservation funding in years 5 or 10. And typically the farmland appreciates at a faster rate than what we've put in that lease. So the idea is that in year 5 or year 10, your purchase option is below the market value of the property, which allows you to get more financing from a conventional lender. So we're really set up to get farmers grow to the point that they can qualify for a good FSA or farm credit type of loan after kind of building up cash flow, building up that history, building up what they need for a down payment, and purchase it back from us in that year 5 or 10. And again, this is just an example. This is one potential way we can work together, but we're really trying to be creative. We want to understand your business, what it is that you need to do in the future, all those aspects that are going to affect your cash flow, and design the lease structure to fit that, and the physical property as well. So great. I think got some case studies that Martin will walk through.
Yeah, I don't think we have too much time. I want to leave more time for Q&A. So I, pause quickly on these, and then, maybe give you a few sentences. But just to kind of emphasize Amanda's point around our flexibility and understanding that farms look different, farmers have different business ideas, different goals. And so we try to be as flexible in terms of the kind of options and the ways that we work with farmers. So these case studies are, just examples, and like we'll work with you to do whatever process and whatever like mechanism works best. But here's one example with Bread and Butter Farm. So they were a diversified operation outside of Burlington, Vermont. We worked with them to to purchase 184 acres, and we're working with them to look at conservation easements and also bringing on some affordable housing on the site as well. On the next case study, this is a kind of interesting case study as well. This is actually something that was a partnership between Dirt Capital, Kitchen Table Advisors, and the People's Land Fund. So organizations based in California and with the focus on equitable land access for Latino, Latinx farmers in Central Coast of California. So this is actually an interesting deal where we actually are securing the farmland and then working to bring farmers onto that land, right? And finding a process for farmers to lease and then eventually have a pathway to ownership. And this one as well, we worked on securing a conservation easement, and then the work with nonprofit partners is that we were able to bring in additional philanthropic funding, so we were able to even lower the price as well. So in the long term, it's going to be a really affordable piece of land for farmers that get access to it. And then on the third case study, this is a little bit more similar to the example and the model that Amanda walked through, but really amazing young farmers in Connecticut. We purchased with them 111 acres. That's a lease with a purchase option, and we're working with the state of Connecticut right now to secure a conservation easement. And the hope is long term that they'll be able to execute that purchase option and have that land be theirs for their operation. So, please reach out if you have something that looks similar to that, or if you have something completely different to that. And on our website, we also have a bunch of other case studies as well, so you can see kind of the breadth of our work, across the U.S. with different types of farmers, whether it's vegetable growers or folks doing diversified operations. We are really flexible and try to work with you to make your farmland access dreams a reality. And you've got our websites. And I think our emails, and then I think we put in the chat as well the intake form, but you'll see that on the website as well. So whenever you're ready, or before you're even ready, if you're thinking about it, reach out. We'd love to get to know you.
Thank you, Amanda and Martin. It's amazing to hear more about your work, and I love the case studies. I have so many questions, and I want to open up the floor now in case anybody on the call wants to use the raise hand function to ask a question, or if you want to just post it in the chat or simply unmute. Now is your time.
I guess I'll go first. Can you hear me?
Yes. Hi, Marcy. Welcome.
Hi. Thank you. This is wonderful. Thank you for coming to the West. My question has to, actually I have many questions, but I'll just start with one. It has to do with your easements. What is your easement value based on, especially for smaller farmland that doesn't have water or forest resources? I mean, how would you do an easement based on what? How do you value those easements?
So we work with a local land trust to do that. So it's land trusts that are focused on, usually have an agricultural focus, specifically on keeping farmland and farming. So the way that that works is that they basically purchase the development rights of that property. So it's keeping a certain amount of the property not developed perpetually. So that's when I was mentioning how we'll work with a farmer to figure out what area, like that future plans, that's where that becomes important. So they'll carve out an area that's called a building envelope, where you can do whatever you want, or you can do certain things that are, as long as it's fit with agricultural use. Basically, it's up to the parties involved to negotiate. So what the goals of that local land trust are, our goals and your goals, so that we kind of bring all parties to the table to figure out what restrictions are appropriate for that farmer that also maximize funding. So every group is different, and it's going to depend locally. And there's many great ones in Washington. So that would be part of our job, is figuring out which land trust is the most appropriate to work with.
So what I hear you saying is if there's no development rights, then there's probably not going to be an easement, number one. Number two, does the local land trust that you work with get any kind of subsidy for monitoring, that yearly monitoring of the land for the easement?
I honestly, I don't know specifically where all of the funding from all those local land trusts comes from. There may be others on the call that could answer that question better than I would. But yeah, the lower the development value of the land, the lower the easement is. For example, we're looking at a property in California that is highly restricted on development, so it may only be 5 or 10% of the value. But most of the time we see something between the range of 20 and 50% of the value of the land.
Thank you.
And I'm just going to ask you to unshare screen, Amanda, so we can see your faces. And I'm going to post the emails in the chat. And I encourage everyone to turn on their cameras if you can, just to continue the conversation here. And I do see one question from Johnny Fishmonger in the chat. We are commercial fishers that are building, processing, preserving infrastructure for value-added products of underutilized fisheries, thus creating jobs and value in rural coastal communities. Some of our value-added products will incorporate ingredients from farms that we operate and partners neighboring farms in our area. Key to our success will be securing either existing buildings and/or land that we could build on. Do we figure into your scope of lending? How do fisheries fit into your
I
scope?
love that question. Yeah, this is such an important area. And so the answer is yes and no. We are not able to fund specifically just infrastructure at this time. We are land-based, so there does need to be some kind of farmland in it. That said, the first investment in this fund is actually with an oyster company in Long Island. So this was a buy, protect, sell. So a local land trust bought this, wanted to keep, this is on the North Fork of Long Island, so a ton of development pressure there, and wanted to make sure this piece of land stayed in farming. It's also beautiful waterfront property, which is what made it so attractive to a rich buyer that's just going to have a massive lawn. But it also made it work for the oyster farm. So we are building them an oyster aquaculture operations building, a dock, and renovating the house, which will allow them to access their underwater farm. I love that deal, but the only reason it works is because there's also 12 acres of prime farmland on there, and we are seeking another farmer to be on that land as well, which we're excited about, being able to have two partners on that one project. But yeah, that's the only case in which we're able to make it work, unfortunately.
So fisheries, work with farmers. Let's go. Excellent. Adi Kandib has a question in the chat. How many of your projects have been successfully sold to farmers at this point? What happens if you reach the 10-year point and the farmer is not in a position to qualify for financing?
That's a great question, and something we think about a lot, because it's so important for us that the impact portion of our that transition to farmers is achieved at the end. So there's what's happened so far, we've had 10 exits and they've all basically gone to farmers. There was one that was not a farmer that we would have normally worked with, someone expanding into organic, but they're 10 of 10. So it would, I think is that fair, Martine? Or maybe I'm being a little generous on the last one, but a couple were not the farmer that we started out with. So for us, that is a part of the ownership piece, is that if it is easy to leave, and if you decide not to farm anymore, which is obviously not the outcome we're hoping for, but is part of why this tool is a way for us to facilitate farmland going forward. If you're not able to qualify for financing and not ready to exit, we are actively talking to all of our other partners, our peer groups in this space that are designed to hold long-term leases, like Iroquois Valley, and we may be able to hold it ourselves in another fund. So to continue that lease, restructure it as a long-term lease, if that's something. We also have some farmers that specifically are going in not wanting to purchase the whole thing from us. So we'll definitely consider that as well. Our goal is to keep the land in farming. So we're kind of solving for the best outcome for everyone and working with our peers in order to do that. But there's certainly there's no event that's there's no liquidation event. There's nothing we're gonna force you to leave if you're actively successfully farming.
Yeah, that's a big part of the work that we offer and the support that we offer to farmers is preparing them for that, executing that exit and that purchase option. So whether that's just helping them get their materials ready for financing or applying for a loan. There's a farmer right now, we're actually in our 10th year, so this is a really relevant question, right? Because we're getting to this place where we're actually reaching the end of some of these agreements. We're working with one farmer to access FSA financing as well, right? And looking to actually be also the partner, a joint financing on that FSA loan as well. So, I think it's a big part of how we support farmers in our portfolios. Like we're helping them think through that exit option and connecting them with the resources they need to do that.
Excellent. Thank you both. Addie says thanks as well. And let's see here. We had another question from Noah K. Noah, did you want to just unmute and ask your question? I see you're here with us.
Sure. Yeah, I was just curious. And I know, Amanda, that we've chatted before, so you might have already mentioned this to me months ago, and I don't remember. So if a property is already conserved or zoned agricultural, are there still ways for you all to join that project? Because you don't have that mechanism to reduce the land cost.
Right. That's exactly it's just taking one tool out of the toolbox to make, because it's already kind of made, that affordability piece is already there. Sometimes there's an opportunity to do more if there are, if it's an old easement, for example, and the land trust really wishes they had an active agricultural easement on it. There are potentials to do that. So we would explore if there are ways to add protections to get more funding. But it's really just a financial thing at the end of the day. It's one way that we get return that's not from a farmer, and if we're not able to do that, then it's just going to affect how much the lease and purchase options are for that property. But I would also say if something's zoned agricultural, it definitely doesn't mean that it can't be conserved. There's still definitely conservation value in a lot of those, because those can have to be changed. The zoning can have to be changed.
So this is Marcy. So I'm trying to paint the case study here. And what I'm hearing is that maybe the farmer doesn't have to have much money up front because you guys are fronting all the money to buy the land. And so the farmer doesn't, maybe 5 years in, 10 years in, doesn't actually have to have funds. Is that what you're saying?
From day one, yes. So I glossed over that part, but we're providing 100% financing. So and because it's a lease and not a mortgage, we're not like getting principal payments back. So it is all of that. It's moved down the road basically to 5 or 10 years. So it allows you to preserve as much cash as possible in those early years. There's no down payment required at all.
And what do your lease payments look like? And are they monthly or twice a year or?
Up to you. We're really flexible on working with farmers on what makes the most sense for their business, as long as it's within a reasonable spectrum of risk for us. We just had our last farmer want to do specific amounts in different parts of the year, and we're cool with that. So it's as Martine said, we're very flexible.
And could you dive a little deeper into like how much those lease payments are per year?
Not really, because it's so dependent on the piece of land, the cash flow from the farm, and the conservation easements. So I'll often get on the phone with a farmer and kind of give an initial range of what I think, and then I call a local land trust, or we find out a little bit more and realize, oh, actually, it's going to be a massive value, so I can bring that lease rate down by half or more, because we're we're comfortable taking the risk that conservation easement funding is going to come through. So what I can say is that we're overall, we don't use leverage, so we're not affected by like market interest rates and such. But as impact investors, and our investors are receiving less than a market rate return. They're receiving less than a risk adjusted market rate return for this. So we are definitely competitive. It's competitive to extremely competitive, depending on the conservation funding.
Okay, thank you.
Yeah.
And I'm curious about how impact investors are, how the organization is funded, and if you can talk a little bit more about your investment committee and how that plays into the larger structure of the organization.
Sure. We are actually a traditional GP LP model. We're a real estate fund that raises money from its investors, and we get a fee for that, and we get fees for performance overall, some of which is tied to impact. And so that funds the management of us and our salaries and all that good stuff. So we are on our fourth fund. So we're actually getting to a real scale and size, which is very exciting for us to be on board. And now I'm forgetting which other part of your question I was going to answer.
Thank you. And I know this is sort of a vulnerable question to answer, so I appreciate it. But talking a little bit about the investment committee, how that sort of plays into the larger structure, and how those folks came on board, and how that ties into the larger story of Dirt Capital.
Yeah, I wish I knew more about the origins of them being on the committee. I don't think, unless you happen to know, Martina, I think neither of us have been on long enough to know that. But we have a group of 4 individuals, most of whom have some ties to being an investor or referring investors to us, that have a lot of experience, both as farmers and impact investors, and co-funders in the space. So they are absolutely mission aligned, and view everything through this lens of the impact framework. However, it's not binding. So we go to we have a monthly investment committee in which we talk through our deals, our pipeline, what we're doing, and we do get approvals for things, but it's really up to the team on moving forward. So yeah, they are incredible resources for knowledge for us, and they're listed on the website. I don't want to mess up any of their backgrounds and going through them all right now.
Thank you for sharing that. Yeah, I'm just curious about the model and how it all came to be. And yeah, I'm going to post the link to the team and the investment committee as well, so folks can take a look. Any other questions for Amanda or Martine?
If no one else has one, it looked like Noah, were you gearing up to ask something? I don't want to jump over a participant.
I've got a quick question, but go ahead.
Yeah. Oh no, you go first.
So I was curious about if you could speak a little bit more on the time frame that you all need for due diligence, because if on market or off market is just really different timing. I think if folks who are selling are committed to selling on the open market, then 30 days is probably, the typical, like, well, it's actually really tight, right? The typical 30 closing day period is what they're expecting. Whereas definitely off market gives you a lot more flexibility to ask for more time. But we are always asking, when we've inquired about properties, if folks would consider a longer closing period to see if we could use an FSA loan. And most of the time we're getting no's. So I'm curious how you've managed that due diligence and time frame, maybe both on and off the market.
Yeah, I mean, I'd say off market, that's not, as you mentioned, not as hard. So we are happy to be involved. And if it's a tricky situation too, we can also step in and be voice of those conversations. Sometimes neighbors are harder to deal with than third parties. Yeah, we're on market transactions. We can, as I said, move at the speed of real estate. So most of the, like 45 days is really as tight as we can go, but most of the time sellers are willing to go to 45. 6 months obviously is a big ask, but usually we start at 60, and if a seller is really pushing, we could go to 45. We prefer to give ourselves a little more time if we're doing both at once. I will say though, if we've gotten a chance to underwrite all of farmers' financials and ask all those important questions and figure out if there's anything funky in whatever area we're operating in, whether that's a new, like for oyster farmers, we needed a little help, for example. Once we can get through all of that, then we can expedite that diligence, that closing period a little bit, because then we're down to the real estate stuff. So it's really just, can we get the, appraisal inspections and all that good stuff done in time, and that is a lot easier. So I don't know if that answers your question.
That was a great question. I know that's like the single biggest hurdle for the FSA is how long it takes.
Oh, and I just quickly, what Martine was saying about us working with FSA too, that is usually why, because we as the seller then to the farmer can provide everything FSA needs, that's why it makes it easier to facilitate that on the exit.
Makes a lot of sense. I was going to ask, if no one else has any questions, then this is more of like a general conservation easement question. So if you can't answer it, that's totally fine. I'm just curious, where I always hear about development rights, but what about like timber rights? That's a big, we have a lot of timber forests in Washington. Timber rights and like mining rights, because we also have a lot of aggregate mines here, like just gravel mines on a lot of those properties that are kind of also ag adjacent. So I'm wondering if those are worth anything in a concert, if you can kind of leverage those rights to finance or get the easement, I guess.
Yes, for sure. And water, I think Marcy also mentioned as well, and that's a big one as well. So we will figure out all of that pretty much. So what's the property, what's the right things here? We'll go down the path of who do we need to talk to maximize funding. My colleague Dominic Grant has a ton of experience in this area and knows more than I do, but we view that as our value add in this too, is to really figure out what all those potential sources of funding are for that particular property. Mineral rights is a really unusual and interesting one in the West too, because if they have been severed and someone else has those mineral rights, it can be tricky to do conservation easements, because typically a land trust is not going to want to conserve a property where someone else has the right to come in and mine for something, whatever it is.
Fascinating.
So, yeah, we did run into that problem in Kansas, but it's an interesting one. I don't know how applicable it is in Washington specifically, but a lot of areas in the West, mineral rights.
No, that makes sense. Yeah, if someone staked a claim, it just depends whether they're like leasing the mine or have an actual claim on it. That's really interesting.
Yeah, it's complicated, but you can get a study done that shows how likely it is to develop those rights. So anyway, that's probably more than anyone wants to know about that.
Dave, looks like Dave has his hand up.
Yeah, really, time is short and I don't want to take up farmer time, but I'm just curious about, I'm from Canada, as you know, Amanda, and wondering about if you had any situations where there's payment for ecosystem services programs involved, and then who's the recipient of those payments, if they are happening on land base that you're involved with.
We've explored it. We haven't gotten to the scale where it's made sense, but I would love to know if you think it would be more applicable for projects and we just haven't explored it with the right partners. We've looked at it with some larger regenerative ranching projects, but typically the acreage size that we work with on average isn't worth those conversations. But we haven't structured one yet, so we could do it anyway. Honestly, I would kind of view it as us being, if we're doing a traditional lease to own structure, being that party of taking those payments and using it as a reduction, so of to be able to offer a cheaper lease to the farmer and kind of get that return back from our investors, because it allows us to reduce the risk in the project as well. But I think it could be yeah, it's very, I think we'd love to explore that more.
Do you have a minimum or maximum acreage and a minimum or maximum loan or purchase price that you do?
Yes, so that's, I apologize for glossing over that because that's an important one. This project size, we're looking to be over $1 million, and that's including the land, building, infrastructure, anything that you're additionally asking for funding to. So if it was like a $750,000 purchase with another $500,000 to build a new wash pack facility, for example, then we could do that. On the high end, our sweet spot is 2 to 5 million, but we could go up to 10 million, assuming we raise our full fund. We are still in fundraising mode too. And sorry, what was the other question? Acreage, we don't, we have on our website 40 acres and we prefer to do a little bit more, but honestly, that's not a major factor for us. If it's an important piece of land for you and meets our overall project size and meets our impact threshold overall, then we'll look at it. And I'd also say, please reach out, even if something's doesn't check every box. We're not a box checking type of organization.
So again, just maybe I didn't catch it before. So if I come to you with a project that's 100 acres, $1.5 million, what money do I need to bring to the table at that time initially?
Nothing unless just operating capital. So just make sure you can actually keep running your business if you're expanding, for example. But none for the purchase of the land.
Yeah, that's just magical. Thank you.
That's the goal of this tool. That's why we use it for farmers of the state.
I think we're all just like, wait, really? Nothing? No, we're just to clarify one more time. No money is needed up front.
Exactly.
Yeah.
I missed something here.
Yeah. Just want to hear it again one more time. Yeah.
But
that's
well,
great.
I mean, it is amazing. I guess I am curious if you're able to structure lease payments in a way. I mean, I know that you don't have to use the typical mortgage rates because you're operating sort of within your own container. But yeah, I'm just trying to think of how a farmer budget rent would at all come close to covering like even a mortgage payment at a sort of more reasonable rate than yeah, the current, because that just seems pretty overwhelming for $1 million piece of property is sort of translating what that would be in monthly payments, even at a reduced interest rate. And I know yeah. So how do you think about it in maybe the different ways than the traditional market?
Yeah, I mean, we're definitely not looking at traditional debt service coverage ratios. So we are definitely going to, work with you on projections and figure out what the farm can support. And we will kind of skew that to be there, but that is an important part of it. If it doesn't support it, it doesn't support it. And that is why conservation easements are such a big tool, because that gives us that return from somewhere else and allows us to make it that much cheaper. So if you're looking at, a property that's conserved and a property that's not conserved, just like put a 50% haircut on the one that isn't. So like it can be a big number, especially in your area. So it's.
So that easement, you project a value initially, and then you settle what the lease payments will be after you kind of do that, so that it's not like 3 years down the road, oh, we figured out what the value of the easement is, and now we'll reduce your lease payments.
Exactly. We're taking the risk on that. So we'll set your lease from day one, and that's not going to change regardless of the conservation funding. So if we're off, then that's on us one way or the other. So it's a positive or negative surprise on us, but you also get the value is passed off directly as a purchase option. But again, that's an option. Like it's with a mortgage, you have to pay it off. You're going to have to sell the property. Like with a lease, you're able to pick up and leave if you don't want to be there. And there's kind of nothing to do at the end of the day. It's just an option if the market value changes drastically, if it's below the value of the purchase option, which is not how we intend on structuring these, but it's certainly possible. You don't have to buy it, or you can negotiate with us at that time.
Okay. Sounds wonderful.
They're great questions, and thank you, Noah, for speaking up there also. We are at time here. I'm going to post Amanda and Martine's emails in the chat if you want to continue the conversations with them. And I'm sure a lot of folks will be taking you up on that. I just want to mention there's another comment from Johnny Fishmonger in the chat about being a part of the first seaweed farm in Alaska. And so maybe there is some overlap there to explore with the aquaculture. And with that, I'm just going to give the mic back to Martine and Amanda if there's anything else that you want to say in closing.
Martine, you want to go? I thank you guys so much, and definitely reach out.
Yeah, appreciate your time, and yeah, please get in touch. Love to hear more about your farm and finding ways to work with you.
Thank you.
I'm posting a link to the VAPG workshop coming up for producers, value-added producer grant workshop. And ABC put a link in the chat, so just had to plug that while we had a minute.
Awesome. Thanks, Emily. Yeah, anyone else have any other workshops or anything else that they want to plug? Anything coming up that we all should know about? That VAPG workshop is.
There's a hedgerow. There's a hedgerow webinar and then in-person workshop. So if you're far away from Olympia, you probably wouldn't want to come to the workshop, but you could do the webinar, and that's on Hedgerows 101, November 1st. That's tomorrow from 6 to 7:30 p.m. And you could find more information on that by going to the Thurston Conservation District website. So if you're thinking of increasing pollinator habitat, all that good stuff on your farm, here's a good place to start.
Awesome. Thanks, Marcy.
You're welcome.
Any other announcements before we wrap up here? All right. Well, I want to give a big thank you to our speakers, Martine and Amanda. Thank you so much for being here and presenting your amazing work and answering all our tough questions. I don't know if I've ever been a part of a session where the Q&A goes right up until the top of the hour. So this is great to see all the engagement, and thank you all for staying on. I want to give a big shout out to Marty Solomon, who organized this session, and just sending her lots of good thoughts. And a big thank you to you, Emily, also for organizing the tech and holding that down for us today. So if everybody wants to unmute and just say thank you to our speakers, we'll catch you on the next time. Thank you, everybody.
Thank you.
Thank you so much. Appreciate it.
It's great because it's so much needed. There's so many people that are stymied by the finance part, given the current interest rates, and